Palantir Technologies Inc. (PLTR) has become one of the most hotly debated names in the equity markets in 2025, with its meteoric rise drawing comparisons to legendary asset bubbles of the past. Behind the exuberance, many argue Palantir represents the mother of all bubbles in today's AI-driven market, fueled by overextended valuations, speculative AI fervor, and an overstretched equity landscape. Overextended valuations. At its current price of approximately $159, Palantir commands a staggering market cap of $362.6 billion and is trading at a price-to-earnings (P/E) ratio north of 530x. Even by the standards of growth-heavy technology stocks, these figures are astronomical. Palantir's valuation dwarfs even industry leaders like Nvidia, which itself trades at a lofty multiple of about 58x. Such a colossal valuation is only justifiable in the most optimistic of growth scenarios, something difficult for any company to sustain over time. Analysts widely view these levels as detached from fundamentals. Citron Research's Andrew Left calls Palantir grossly overvalued, emphasizing its disconnect from realistic business metrics when compared with true AI leaders like OpenAI. Wall Street consensus is bearish. Among 27 analysts, the median price target sits at $96, which suggests significant downside from its current trading levels, in the 20% to 40% range. These calls highlight the persistent gap between Palantir's stock price and its underlying earnings growth. Market overexuberance. Central to Palantir's skyrocketing valuation is the current wave of AI enthusiasm in the market. Investors have poured into stocks with any linkage to artificial intelligence, often discarding nuanced analysis for speculation. Palantir, with its AI platform and high-profile government contracts, has captured much of this excitement, arguably becoming the poster child for AI overexuberance. The company's pivot to generative AI, integrating large language models and rolling out new solutions, has stoked hopes of exponential future growth, driving its stock up by 130% in 2025 alone, and over 340% since 2024. However, critics argue that much of these gains come from hope rather than delivered earnings. Palantir recently revised its annual revenue forecast upward, yet the price reaction seems far beyond what updated fundamentals alone would warrant. With investors pricing in perfection and assuming unabated margin expansion for years to come, Palantir is trading at multiples, PEG ratio over 8, price to sales at 65x, and forward P/E at 140x. That dwarf not just tech sector norms but even the wildest periods of market excess. Such valuation metrics call into question the rationality behind current price formation, as any setback in growth, competition, or market momentum could trigger sharp corrections. Overall market valuations and bubble risk. Palantir's story is a microcosm of broader market excess, where AI excitement has led to a wave of asset inflation. The S&P 500's best performer this year, Palantir is emblematic of a wider phenomenon. Investors seem willing to pay any price for exposure to perceived AI winners. This has led to a distortion of risk assessments, with traditional valuation signals drowned out by speculative inflows. Even as Palantir reports robust growth, Q1 revenues up 36% year-over-year, U.S. commercial sector growing 70%. Its valuation assumes such pace will not only continue but accelerate. This sets a trap for new investors. With earnings growth already reflected many times over in the price, the risk-reward profile is heavily tilted towards downside. Furthermore, Palantir's concentration in government contracts and its susceptibility to overall market corrections add extra layers of volatility. As high-profile funds and early backers have begun to reduce exposure, warnings of strong sell abound across analyst reports. Conclusion. Palantir's current stock price and valuation can be seen as a prime example of a bubble in the making. A blend of overextended numbers, outsized AI market optimism, and an environment of elevated equity valuations. Such conditions have produced outsized gains in the short term but may prove unsustainable when tested by the realities of competition, margin pressure, or changing investor sentiment. The lesson from Palantir's astonishing rally and the skepticism it has generated is clear. When the market loses sight of fundamentals in favor of thematic speculation, bubble risk rises sharply. As history has shown, stocks in similar fast-growing sectors have often faced brutal corrections, sometimes as deep as 90%. Palantir's ride may be exhilarating, but for prudent investors, this mother of all bubble deserves an abundance of caution.